full invoice management, credit management, that's okay. So it's going to be a beautiful mix of understanding what we have been speaking about, blending high-tech and high-touch approaches in the BFSI space, specifically post-pandemic. So while the names were announced, but let's go quickly face to the names that we are speaking about. To my extreme left is Anuj Prakash, who's head of growth for OK Credit. Sitting next to him is Mr. Nandakishore Purohit, we commonly call it as NK. So NK Purohit is the CTO and Chief Technology Officer with IFL. To his left is Ravish Bhatnagar. So Ravish is the SVP and Head Digital Banking at IndusInd Bank. To left of Ravish, we have Vishal Gupta, Head Product with PhonePe. And on my extreme left is Jishnu Chakravarti, who's the Vice President for Digital Assets at Kotak Bank. So, hi, welcome all.
Thank you.
And as I straight away dwell in my question one, and before I go into that, a simple fact that I want to state that happened during the pandemic time. And that was where all the bankers are aware that how post 25th March lockout, the RBI had taken several steps to assist, to ensure this, this tough times, how banks can cope up. Things like repo rate reduction, reverse repo, the loan moratorium, cash reserve ratio, etc., etc. But there were some positive sides to that. Positive sides like simple, just in one quarter of 2021, we had things like 8.32 billion mobile-based transactions and close to 1 billion net banking transactions. So I'm like, while we are talking of all this, banks had also taken a lot of initiatives to meet this challenges during this and of course post period. So let's discuss. I'll start with Ravish. So let's discuss the impact of the pandemic and post pandemic on accelerating the pace of digital transformation and adoption during and of course post pandemic.
I think pandemic. You can say it's a wrong word to use, but the pandemic actually accelerated it. It was let's say a boon for the digital, right? Not the best of things, but for digital, it was actually a boon. So some statistics to start off with. So 2014, in traditional banks, right, and in banking industry, the internet and mobile banking penetration was 30%. Right? 2016 is when you saw Comoditization happen. In 2017, when suddenly there was a mistake done again, that number had catapulted to 37%. Right? So basically, customers of banks who are on digital channels, right? And this number right now is for the traditional sort of business is actually close to around 60 to 62%. So that essentially means that people, and there are different segments, right? So I'm sure that there is an audience here, and many of you are digital natives, right? Who are born in the era of, when India had internet, right? There are digital adapters who will, if you give them a nudge, they will, on the back of certain USPs, will come onto digital channels, right? And then there are people who believe in digital channels, and then there are people who, by the way, stay away from digital channels, right? For their own, they have obviously some reason or whatever. So all of this, basically, what has happened is digital native, anyways, was onto the app, right? But what this pandemic has done is it has pushed the adoption for the digital adapter, and it has also led a lot of customers who believe in the digital channels to start using digital. I think that is the entire push that has happened, and this is what you have seen the difference that is happening. And there are different entities here. Some of them are from the digital native era, but banks and securities are people who are actually from the digital era, who were born into this digital era. A lot of our innovation has been on the back of what customers have done. So that's where we are, and it's a very, very interesting.
Sure. Thanks, Ramesh. Thanks for that idea of taking us back to 2014 and what happened post that and demonetized and of course the great 62%. Let me go into specific area of bank. Like we all know about assets, liabilities, and all. But of course, during pandemic and post-pandemic, where now focus actually is going towards digital journeys. And now when Jishnu is leading such kind of responsibility, where things like home loan, things like personal loans and all, where a topic is high touch, right? Where a high touch is important, a physical touch is important, but in such situations, how is it that you're creating a digital journey? And going back to the same question, in perspective of the digital transformation adoption during this phase for these kind of journeys that you are able to do.
So when I hear about the question, the first thing that comes to mind is the meme that was circulating in the middle of 2020, which was that there was a question: who is the main digital adoption agent, digital who is driving the digital agenda in your company? Number one was CEO, then CDO, and then it was COVID-19. So COVID-19 is the correct answer. But jokes apart, behavior change has definitely happened during the COVID-19 saga. But most of those are not anything radical, but already, as Ravish mentioned, those trends were already there from before, from 2016 or even before that. And some of those changes have been expedited. Like so customers have they have never shied away from adopting digital. They have always adopted digital with both their hands. It is the organizations that have always left playing catch up. So we always thought that customers will not be able to go through complex multi-step processes. They won't go through other EQIC, video QIC. They won't upload their bank statements on Perfuse. But they have proved us wrong time and again. So customers have proved that their tech appetite is much more than what companies are able to offer. So companies were left unguarded because the sheer speed of the change was very huge, and it exposed a lot of the systemic and behavioral weak points in the organizations. So the organizations which have come out with flying colors, I think they have done some good developed decision making, because nobody is I mean, your guess is as good as mine when we are going through uncharted territory. So and the behaviors that have shifted, like shorter attention span, instant gratification, and of course overall greater digital adoption, all of these are probably going to stick, because these are all last mile behavior change. And so if we go back 2 3 years, like ordering in via Swiggy instead of directly calling the restaurant next door, paying by UPI to your laundry guy. So all these behaviors are postponing buying of a new car for 25 to 35-year old age group because of Ola, Uber, etc. So all these behaviors have actually stuck. Jury is still out on things like 10-minute grocery delivery or BNPL. So that time will tell. But most of the changes that have happened during the pandemic are going to stick. Like the things of work from home, or the collab tech, screening tech, or things like low touch hygiene. So you'd be loath to give up on our 1 or 2 days of work from home, because supposedly we achieve so much more in those 2 days. So I think it's not about going back to normal and worry about what will stick or not stick, but I think it's about blending the best of both worlds, uh, both the changes as well as the previous high touch environment.
Thanks, Jishnu, for that. And really, that's a good insight that where what we thought about customer was wrong, and they actually thought us that they are there to do this journey, they're there to submit bank verification and the whole process. NK, while I spoke about the mobile numbers, the transaction numbers, there are some good numbers for yours as well in the securities industry, where I'm speaking of. Please correct me if I'm wrong, and if you want to give us better number the way Ravish gave us, it's like a whooping 142 lakhs in FY21 is the new registration that happened for trading. 122.5 lakh with CDSL and 19.7 lakhs with NSDL. Interesting numbers. So, what is your say on the impact of the pandemic and post-pandemic in accelerating the pace of both digital transformation and digital adoption?
Okay. So numbers are almost right.
Thank you.
I'll just convert it into growth, which is 234% versus the last year. Okay. And people thought that post-pandemic also, it was a pandemic scenario, and the post-pandemic the growth would reduce. On 234% growth as a base, in last 1 year, the industry grew by 34%. So this was an inflection point as far as investment industry, which was about to happen. Just to give you perspective on the industry, India 2 years back had a penetration of population to investment at a rate of 5%. So only 5% of our population is into equity markets. If I compare it with US, it is at 55%. And in year 2007, US has peaked at 67%. So in terms of opportunity for the industry, it's huge. Okay. Now on your specific question of impact of pandemic on digital transformation for traditional companies like us, I don't consider ourselves as a traditional company. We are an old company with 25 years of experience and legacy, but digital at heart. And our industry is digital native. So I'll tell you what happened. As an industry, it is one of the first globally into financial services, a completely digital native industry, both from the perspective of consumer as well as producer like us, because in our entire customer life cycle and value chain, there is nothing which happens physically. Okay, exchanges are digital. Okay, so the industry itself over a period of years have evolved from a high touch to a digital native industry. Now, from a digital transformation perspective, like others, since we are an organization which is 25-year old, we have evolved with the industry, and within our organization, transformation was organization driven. Okay, and I think all the fellow panelists, except PhonePe, would agree that we all have seen an organization driven digital transformation, which means there is a digital department in the organization who is given or entrusted with a task to transform the organization digitally. I don't understand how 5 people can transform the organization digitally alone, but people try. And we have been working on it with lot of roadblocks, etc. What pandemic gave? Pandemic resulted in a customer-driven digital transformation. So there is a huge shift from an organization-driven digital transformation to customer-driven digital transformation. And this has benefited not only traditional players or not only incumbents, I call them incumbents, as well as new digital native organizations wherein they have also learned more from the customers. Because till now, pre-pandemic it was a push, post-pandemic it is a pull, and impact on us. The pandemic for both banking and investment space has benefited us in 3 ways. A, since there was no choice, so each and every department of the organization who used to push the digital transformation of the organization primarily from the compliance, data security perspectives, once you don't have a choice, when you are pushed to the wall, it's better that you get together and face it. So we all work together, found out solutions to the questions which we used to pose to each other. Regulator also helped us, the way you mentioned about regulator in the RBI or SEBI. Regulator who was skeptical, okay, also thought through and helped. Okay, and third thing which helped us was India step. Because in most of our organizations, be it banking or customer onboarding only had a physical or a high touch. Rest in banking also you don't need anything. As far as liabilities business is concerned, you don't need anything physical. So regulator came into the various departments of the organization had no choice because it is now customer-induced transformation. And last but not the least, we started reimagining our entire processes from a customer's lens. Okay, gone are the days, but it's still there, where for every service request you give a reference number and customer is used to remember or required to remember that reference number to get the result or the status of the service. The customer says reference number is for you, not for me. I only remember my mobile number. So if you can service me through my mobile number, do it. Otherwise, I'll find out somebody else. So these are fundamental changes which has happened. As far as our industry is concerned, today we stand at 98% of customers transacting digitally. Our 95% revenues comes digital, and this is almost similar for all the players. And this entire digitization has resulted in this. So what all we opened in last 2 years is what all in terms of customer acquisition, what all we had acquired in last 20 years.
Wow.
That is where we are.
2 years, 20 years, phenomenal.
Yeah.
So, I'm glad that the transitioning of all the answers is in the same path where first Jishnu said that, first Ravish gave us light, then Jishnu mentioned about, customer taught us of how they will accept, and NK, phenomenal. I mean, like, instead of organizational digital transformation, customer-based digital transformation. That's very nice. Let's slightly, digress from the banking and securities environment to now I'll go to Anuj and a very different business. Hardly 5 years. I'm talking of 6 million active monthly users, the microfinance, the small business people, becoming actively using your services and your solution. So, what is your take in perspective of impact of the pandemic, both on digital transformation and adoption?
Got it. As Ravish correctly pointed out, these outlier events like the pandemic are breeding grounds for innovation and adoption, right? And our case is a little different. Like digital systems and products were already in place. We saw adoption of certain digital features in a more better way, in a more faster way, right? So I'll take an example. 80% of our merchants are from tier 3, tier 4 towns, right? And one important persona is retail store owners, grocery store owners. And before the pandemic, they were using OK Credit mobile app to basically record or to list down all the transactions and store all details of receivables due from customers like you and me. Right? The settlement was done in cash whenever the customer used to visit the store, visit the shop, right, either on a monthly level or on a bi-weekly level. But when the pandemic happened, customers were not able to come to these shops, and hence these dues were stuck. So here we saw adoption, rapid adoption on our payments platform, where merchants were doing KYC themselves, generating their personalized QR codes and payment links, and then distributing these links to their customers via WhatsApp, right? And then they were receiving these dues which were originally stuck because of the pandemic. And so the main agenda to note down receivables is not that I'm going digital by just noting down my receivables on the app. The main motivation is to get my dues faster. Now that value prop is being achieved, right? The merchants know how to use the digital payments, and hence the retention on the payments product did not drop and increased as time went by. So that's how adoption has seen a greater push. If I talk about digital transformation, we've gone from an era where pre-pandemic stage where customers used to go to merchants, boss UPI hai, Google Pay, you accept Google Pay, to now merchants proactively pushing links and accepting payments digitally only.
That's a nice take, where more than just providing services and solutions, but going one step ahead to assist and facilitate business. In fact, we have experienced this with Ujjivan Bank and and FinCare to some extent, where during the pandemic times when field people, it was impossible to go to do EMI collections and all. They facilitated the links, they facilitated them that hey, you can go ahead and do the BeamPay payments and all. So some more statistics from perspective of payments, and this is where RBI in its annual report of 2021 said that the payment systems recorded a robust growth of 25.2% as compared to the previous years. And so with this, I move my next question to you, Vishal, from PhonePe perspective. That what is your take on impact of pandemic and post-pandemic on both digital transformation and adoption?
Sure. Thanks, Sanjay. See, pandemic was something no one anticipated, no one expected, and it kind of changed the paradigm completely in terms of how we look at the life. And while it brought in certain challenges, it brought in definitely certain opportunities, definitely for the BFSI ecosystem, digital ecosystem to look at from that lens. Payments is the one step where basically is the first step towards becoming digital or starting your digital transaction journey. And in the pandemic, we clearly saw that people not only who were sitting on the fences, they transformed into the digital adopters, but also people who were basically could not imagine that they will also come on digital. They also started coming on the digital. The grandfathers and grandmothers, or moms and dad generation also, if you think about, and they've taken it to the heart, to the level. Very recently, I was in the market and talking to a few of the merchants, and all of the merchants gave us almost similar number. And I'm of course talking about Bangalore here, that 75 to 80% of their transactions are digital transactions now. And that's the transformation which has happened, right? So one way was the demon, where basically people became sensitive to the digital payments and started opening their door or minds to the digital payment. From there, basically, if you think about when you are locked in the door or locked in your houses, digital payment was the only way to move forward, because if you have to make a remote payment, if you have to do recharges for yourself, for your mates, for your staff, everyone started coming on to that. And then from there onwards, it was a trend which was basically very, very heartening for the entire ecosystem for that lens, right? Because that has kind of given the change the baseline for the ecosystem. And now everybody who is transformed into a digital enabled or digital transaction enabled, now they are going up the value chain and saying that, okay, why can't I kind of start investing digitally? Why can't I start buying COVID insurance digitally, which is a need of the hour? Why can't I basically start doing remote payments? And then that becomes the habit of the life. So I think that's the biggest change. For whatever it's worth, pandemic shouldn't have happened, by the way, but it has happened and it has literally changed the paradigm.
Yeah, thanks for that take. And from that, I'll just go to the next clue where I was surprised to read that you all are one of the largest insurtech distributors. From a payment, company payment facility to insurtech, and you got some awards also for that. And of course, the growth has been phenomenal with 350 million users and 150 million active. So from there, I will start my next question with you as well. Like with such kind of volumes, like how do modern day financial brands like you all effectively engage with customers across multiple channels, ensuring digital adoption? So with you, I want the answer more from fintech perspective, and then I'll go back to NK and Ravish. I'll ask the same question from more traditional perspective. Yeah, I would like to hear.
Sure. See, I think with the digital footprint, right, smartphones penetration reaching into like 500 plus millions, in fact 600 millions. We have now 375 million registered users, by the way, and we are doing 100 million transactions on a daily basis. Because of this digital footprint which has been created, the inertia which was there in customers' mind, to take example of something on the insurance side, right? Pretty much last mile driven, agent driven industry, pre-pandemic, let me put it this way, because it's a complex product. Somebody needs to explain what this product is all about and what benefits are there and what caveats are there. But if you're sitting at home and you know that there is a risk which is called COVID, how do you ensure or protect yourself on that? And if someone is giving you that offer on a digital channel, which can be like literally bought in 10 seconds, that kind of changes how people are looking at it. And once you cross that barrier, right, of that, okay, I can buy and understand the insurance, going up the value chain again from a more complex product is much easier and much more possible. It becomes much more viable. I think both NK and Jishnu touched upon that it's a consumer-driven growth, right? And when there is a pull on the consumer side, I think that's what we were waiting for. I can speak on your behalf also, right? That's what everyone was waiting for. That hey, digitization is everyone's benefit. How can we make it happen and what is required? And very, very glad and to be proud to be part of this entire ecosystem, where we are contributing in our ways to make the entire country towards the digital.
Thank you so much, Vishal. So Anuj, this question comes to you right now. That how for OK Credit, you all have been able to effectively engage with customers across multiple channels, ensuring good digital adoption.
So with the various number of channels at play, with the sheer number of channels now at play, right? And also add to the fact that every channel has a different efficacy based on where and when used. Omni-channel strategy is very, very necessary to have. And not only just an omni-channel strategy, it needs to be very closely tied to data, the product data and product analytics, right? For example, it is a very different, it's a very different channels would be at play when we are targeting adoption and onboarding versus when we are targeting habit building of the user. Now, once the user has been onboarded and started using the app, how can I ensure habit building? A lot of very different channels would be there. Similarly, based on the user persona, in my experience, personas like small vegetable vendors and pawn shop owners have a very high engagement on push notifications and WhatsApp notifications, whereas a big manufacturer which has a full IT wing setup will have a will have a higher engagement rate on emails. Right? Add to this, now I also feel that lines between engagement and product are also blurring. Right? Engagement channels earlier just used to notify you. For example, if I book a ticket by Make My Trip, I'll get a notification on WhatsApp that, hey, your ticket is being booked, this is your booking ID. To the point where we can use WhatsApp chatbots to do the complete KYC of the product using an engagement itself. So I think omni-channel strategy with heavily linked to data is a must-have in this age.
Hey, that's an amazing input. Thanks for that, Anuj, because yes, different stages of life cycle, different channels are more effective. And as you said, like WhatsApp just to provide tickets as compared to WhatsApp where I'm doing the whole KYC. That's an amazing thing. So, Jishnu, I will take this question to you right now because from both from perspective of while creating this asset products, again it has its own life cycle. So, A is how do you engage across multiple channels, and also see to find out the borrower's propensity to default. We are running AI models also, right? So how you are using AI models during your engagement also. So one is engagement across channels. How are you making that effective and using AI models at the same? So
Yeah.
that's the question.
So before I get into it, just wanted to take 1 minute. So why? So from on BFSI, you are always more interested in acquisition and conversion, but engagement has assumed a lot of importance in last few years. So why? So I think one of the reasons is the increasingly commoditization. So be it loans, policy, accounts, everything is commoditized. There is not much difference between multiple banks offers, other NBFCs offers. So everything is commoditized. There is no way to stand out. Plus, there is a lot of information we are getting that is thrown our way, consumers' way. Consumer is not able to find out from the clutter what is the why we are trying to reach him. Plus, the things that have come in the last 5-10 years, shorter attention span, instant gratification. So, and plus, consumers are every day getting exposed to excellent engagement from apps like Amazon, Spotify, Netflix, and all. So, if we don't do proper engagement in an omni-channel thing, that is not a choice, but that is something we have to do. Otherwise, we'll get left behind basically. So, in terms of how we can do the proper engagement right from onboarding. So during onboarding, there has to be proper handholding and maybe over communication. All kinds of there has to be helpful redirections. There has to be any kind of requirements or dejections that we are doing. It has to be explained like you are a lay person. Post onboarding, when you are already a customer, then we have couple of options how to reach out. Obviously, how is a blend of art and science. So things like call to action, color, verbiage, visuals. These are your cases as good as mine. So it's best to leave them to A/B testing and not be a very creative person. Try to be a very creative person. Other things like there has to be personalization and customization at scale, for which these AI/ML models come in handy. So we try to marry the behavioral data on the browser along with the offline data and backend data, and try to build a profile of the customer, where we try to build the attitude of the customer based on the observable behavior. And so the marketing holy grail is again the segment of one. So which may not be possible on all the channels like SMS, email, WhatsApp, push notification. It is still to some extent possible, depending on the capability of the platform. But things like paid, it may not be possible, and it will even be creepy to say to go to that level of segment of one kind of communication. So in terms of what we want to communicate, we can communicate on the usual banking stuff, which is on the rates, on the offers that we have, how great our DIY journey is, and to a select set of customers, maybe we can say you will get it anytime, anywhere, instant, 10-second cash. But that is a very limited scope. So what we believe is not to give a very optimized path to the customer and give him a very leisure targeted lead generation funnel, but let him explore, because after exploring, when he comes back, he comes with a greater intention to buy, and maybe the lead generation volume will drop, but the conversion rate should increase. So I mean the human, people don't want to be told what to do. They want to explore and see what to get. So that's why we don't want to give a very leisure targeted lead generation funnel or any kind of action that we want them to take. But so this is my personal view, not from my banks or anything. So currently we are mostly focusing on the banking products and banking messages. Why? I mean, we can also probably assume the role of the trusted advisor. So banks have always been one of the places of support and high trust. So current situation is very tumultuous, as there are a lot of changes that are happening. COVID lockdown, obviously, big data, wearable techs, self-driving cars, all these things, space travel. So customers are kind of feeling lost probably. So why we can't assume the role of anchor in this scenario, and be the basically, instead of only talking about the financial things, why we can't also talk to them in a frequent and personalized manner to guide them like a life coach kind of thing. We can give them virtual sessions. We can give them tips to increase their work-life balance. Like Edelweiss has recently started giving book summaries of very good investment books by very famous investment gurus and all. So basically, I want the banks and probably banks and NBFCs, they should, this is an untapped opportunity. They should get into this world of advisor, where they move away from the underwriter of risk to how to actually reduce those risks by the customer.
Absolutely correct. Yeah. So besides effectively engaging across different channels, even working on some more personal contents which matters more.
Correct. So going beyond the banking products and assuming the role of advisor. So it will not be just about loans or policies, but it will be they will assume a different positive space in the customer's mindset.
Sure. So I no wonder. I mean, like in the latest financial statement of Kotak Bank, he mentioned never normal. I remember we always speak of new normal, and Uday Kotak being never normal. So I think that's the story of your exploring. We want the customers to explore rather than being told what they are said. And in the similar lines, IndusInd Bank definitely is doing amazing things. No wonder you got the Celent Model Bank Award. Congratulations to you all on that. For a new payment system transformation that you did. But coming back to my previous question, Ravish, and if you can add the AI element, it will be great. So the question is around with these kind of digital transformation. So how do you effectively engage with customers across multiple channels, ensuring digital adoption at the same time using AI also in this engagement?
So see, there are obviously multiple channels that are available right now. What is the most effective strategy, right? Is where do you target the customer better? So for example, if you need to be a relevant app right now in today's world, I'm competing on a person's app with basically the Netflixes, the Hotstars, or actually that kind of a mindset. Right? So I have to be relevant, and I have to know not to cross the boundary of it. Because privacy and security are also becoming very, very important as concern areas for individuals, right? And spamming is the other place, right? That you can't be like calling up a customer and emailing them, etc. 10 times a month. Not the right. So we need to understand, and that is a real time, engagement, something like a streaming data helps, right? So some of these tools, when backed with the customer behavior, right, on the channel, that combination of it helps to target the customers in a better manner, right? So that effectively means where the customer is, you target them at that particular point in time, right? Like if the customer is on the app, then app is the best case at that point, right? Then there's no point sending an email or an SMS. If the customer is on social media, and again, trying to just understand what do you want to communicate, you can't be doing, as Vishnu was saying, maybe one-to-one communication over there. But talking about the benefits that you want to leverage, to target them in that particular manner when they are on social media, right? And similarly, when they are, in different channels, when an RM calls up, all of these multi-channel, omni-channel approach, they need to have the latest information. So AI ML at least plays a huge amount of role. So a lot of personalization, and in this world, I wouldn't use right now hyper-personalization because not a lot of companies understand that space, and it's still a very, very growing sort of space. So let me just restrict with personalization. So a lot of your AI ML based cases will be personalized, right? And you need to understand the actual thing that the customer is doing on the channel, the behaviors, the backend. Sometimes events happen. Maybe a simple use case, like somebody has done a UPI transaction not on your app, but maybe let's say a phone pay app, but you also as a bank have UPI, right? But you will know that the customer at the back end, the switch is the customer has done it. So if you want to engage the customer, that is the time to engage the customer, right? Talk about your specific product. So it's very, very helpful in this case, but be very, very cautious of how you are engaging with the customer because there is always the right amount of engagement, and we need to be cautious.
Sure. Thanks, Ravish. And NK, so instead of putting the same question that, how do, specifically a 25-year-old brand with digital in the heart, bring about engaging customers across channels, I would rather want you to give a 1-minute, 2-minute takeaway for all the audiences here because nobody has as rich experience as you. So would like to hear that from you.
Thanks. I'll take this as a compliment. Arts is a very different industry, and I want to bring across that. Arts is one of the highest involvement industry. Okay? Any other industry, be it e-commerce or banking or credit, is a consumption industry. When I say consumption, there is a one transaction which a customer does, initiates, and then it's the fulfillment of those transactions. Whereas in our industry, it's second by second, millisecond transaction which a customer does, and it's very high involvement because whatever he does in his life to earn, he invests with us in order to grow. So customer engagement in our industry becomes of an utmost importance because his money is either growing or reducing with every second. First. Second, since it's a high involvement industry, we get only 8 hours a day, Monday to Friday, to do business. So for me, the engagement with the customer, the scope is 40 hours in a week. If I remove holidays, it is 246 days a year, period. So in our industry, as we have grown, we have moved, we have used multiple channels, but what we have come to understand is that in such a high involvement industry, there are 3 things which are very important. One is product-led engagement. Okay? If the customer, everything is moving every second, I can't use effectively either email or SMS to engage with the customer and either generate revenue from the customer or get anything from the customer, because by the time he goes on the email and transacts, okay, the opportunity is gone. So with our industry, and which will come, and what is, we talked about Netflix, same is the case with Netflix or Amazon or the 4Ks of the world. In our industry, it is a product-led engagement. Second, our industry has moved from execution to engagement. Till it was physical, every employee in our organization was doing execution for the customer on phone. Today, since it's 95% customers transacting digitally, it is a true engagement which we are doing. So it's a product-led engagement, execution to engagement. Now, what my customer want? My customer doesn't want what he knows. My customer doesn't want to give him a application which tells him what is the price of Reliance. He doesn't want that. My customer wants, if I am a frequent trader, you know me, and make this product which tells me that this is for me. So in such a high involvement industry, product plays an important role. Product is engagement. There is nothing called as product and engagement. The growth is product led. So I'll just coin a word as a summary and for all of us. Gone are the days when we were using microphones to acquire, convert and service customers. When I say microphones, I'm taking liberty and no hard feelings with the sales and marketing friends who are here. Sales and marketing in this aspect I call microphones because they are static in nature. I'm broadcasting. Okay. What we need in the true engagement world are magnets. Okay. If I can convert my microphones to magnet, if I can create a product who is a magnet, who creates awareness for the customer, who creates stickiness. Stickiness comes very later. First, I create that you need an investment. Okay? If you can create awareness with the customer, help him transact, service, and then habit forming. This is true engagement. So, converting, making your product magnet is the true engagement in any world.
Sure. Thanks, NK. I think